Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. Let's take a look again on the gold market. So as we promised in today's gold report, fundamental report, we have considered recent numbers on the consumption expenses, gross domestic product, and have taken a bit wider view on these numbers, why they're important for the gold market. I have considered another important and interesting issues that stand right now on the market. So some really big events have been ignored by the media or just briefly announced without attention that it's really deserved. And we all this stuff put in the context of the current big fundamental background that tends to the gold market. So I think that you will find it interesting. Speaking about the technical side, this week we've got downside action for the first time after long-term rally. And if you take a look at the higher time frames, monthly, weekly, so you will see that actually context remains bullish, everything stays great, but market a bit overextended. And based on the scale of the weekly time frame, on the monthly time frame, this drop is a bit too small to trigger some or create some good background for a new entry. So on the weekly, for example, we need to get a bit deeper retracements to make it attractive for another attempt for taking the position. Whether gold provided or not, we will see. But on a weekly chart, market still stands near the overbought area, and this retracement is too small. It is so small that we even haven't considered, haven't got any Napoli pattern. So it even not closed below the 3x3. So this is daily chart. On the weekly chart, it's not even closed below the 3x3. So small this retracement is on the weekly, which potentially makes possible deeper retracement. But overall context remains bullish. Also, do not forget that this top actually where the market stands, it's not only overbought, it's not only overextension, but it also on the monthly chart, this is the target. So this is 1618 extension of this big BC retracement. The market stands. And if even it will be the drop, I don't know, some 30% pullback of this recent frosting action, it will not be some problems. Even retesting of this 21 previous top, it will be absolutely normal. So it seems that it's big on the lower time frames, but on the monthly, it even not the 30% of this upward action. It will be very small. So that's why we do not see any problems if we will get some downside continuation on the gold market. We just suggest that any drop here that we will get, it will be a really great chance to accumulate more physical gold and to invest more for long term. For the short term, for speculative purposes, it might be different view. But those of you who are consider gold for preservation of your assets, of your wealth, it might be really great. So we do not see currently any reasons to step out of our strategy that gold should keep rising. So in a shorter term, on our daily and intraday charts, actually, guys, we do not have really new issues. So we will try on the next week to finalize this bread and butter trade. So it started really nice, but as you can see, market hasn't quite reached the 618 resistance area, which is a 2377. This is minimum target of the bread and butter trade. So that's what we will be busy with on the next week. So on the 4 time frame chart, you could see that this is the target actually, 618 level, 2377. As I already mentioned, that you could use probably 618 level for a conservative target from the most recent drop. It's also possible. And on the hourly chart, we see that right in the same area we have the XOP, 2379. So it seems that if everything goes with the plan and bread and butter will be finalized as we suggest, probably it should be finalized with the completion of the XOP. Meantime, on Friday, we've got to respond to the OP target. That's the just intermediate target of this upward action, We talked about this on Friday and said that it is possible. And market now stands in a retracement. So with this retracement down, maybe it will be even A, B, C, D retracement. We have two levels to watch for. First one is the confluence, 23.23, 23.29. It's actually briefly has stated already, but potentially, for example, we could get something like ABCD, and we will get maybe here's local kind of the garter steeple to buy pattern. It's absolutely normal. And this is preferable retracement area. So we prefer to see with the market have the bullish pattern, we prefer to see the retracement stance moderate. And it's absolutely normal and natural if market just test confidence and reestablish top protection. That's our best case scenario. If by some reasons gold still will keep dropping, the maximum that we could accept is the 23.15, 618 level. Breakout of this level, well, it will not totally erase the bread and butter, because sometimes you could see even retesting of the previous lows, forming some kind of the double bottom, and after that market turns up again, keep going to the target. Sometimes it happens, but this more an exception rather than rule of thumb. And this will be not very comfortable to deal with this setup if you have the position. Most of us will out at the break even in this case. So if this will be a scenario really with the return back to the lows, and if later some bullish patterns once again will be formed, we consider that, suggest that it will be easier and more comfortable to re-enter at some new conditions, rather than just taking position somewhere here, just keeping it from the oldest possible reversal. This is unsafe, first of all, because market just could keep going lower. It's also possible. Well, this is not quite uncomfortable psychologically. And from that standpoint of view, we think that if you have longs, you could keep them for the break-even stops and watch for retracements. If you would like to take long position, that's the levels that you also could consider. But if somehow market will break below 23.15, or this 14.66, it will be better just to out on the break-even or whatever and sit on the hands, see what will happen. Do not trying to take long position immediately. Hopefully this will not happen. Market will keep going with the natural performance around the conference, keeping this possible upper continuation. But as you understand, everything will happen. Just let's see. Next week will be really tough, so we will get the inflation data in Europe. We will get a Fed Reserve meeting. So a lot of events could make impact on the market performance. That in two words what we have on the gold. Let's keep watching.